All right, hello folks, I'm LA Little and this is your daily TA wrap, where we take a look at these markets and we do it from a neoclassical perspective. Each time asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube under the channel LA Little. So check it out. If you missed the show, you can pick it up there. Archived usually about 15 to 20 minutes after the show is over here. So what do we have happen today? You know, last week, in review, I remember we had a pretty big drop last week. Well, today we got the bounce going. And if you look at it, it was a pretty decent bounce, especially on the NDX and on the NASDAQ composite itself, 0.75% on those, and 0.75% here on the S&P. On the Russell and the Dow, you got about 0.5% up. If you look elsewhere, the major things that stood out today, gold tried to trade down again, actually ended up only down 0.33%. Silver down about 0.5%, and the natural gas got a pretty good pop. The dollar pretty much flat. So from a perspective of price, not bad action, but if we pop over to the charts and let's pop into the S&P 500 to start with and kind of take a look at what's going on. So here's the daily chart, and what we had talked about, and I'm going to pull the weekly over too, and let's pop back into the daily though. What we were talking about coming up was that we were going to see a retest regenerate take place, right? So the last swing point low that was broken was this one. If you draw that across and you look at the top of that to see what it looks like, we got almost to that top today. That high on that low, that swing point low that was broken, 1943.35, you got up to 42.92, so just missed it. You did 30.7 on the way back. It's got 30.4 on it. The breakdown bar has 41.930 on it. So, and actually I have to take that back because the breakdown bar for this low is Friday's low, or Friday's bar, which is 37.8. So you're coming back up. You got a little bit less volume. It's, what is it, 10% or so. And you're coming back into that top. Now, in a normal market, that should retest, which is what it's doing. Because it's coming back within 6 bars, it should have about a 50-50 chance of getting over it. And so that's a decent chance. And then you add in the fact that this has been an extremely bullish run for a long time. So maybe it has a little bit more, better odds as a result of that. But then you take the negatives, and the negatives were that you came down and you broke a lot of swing points. So that's a lot of damage that was done on the way down. And then one more time on the positive side, you came down fast and furious. So you go from, just take a look at the numbers, 1991, you go down as low as 1916. So you basically went 85 points lower in a week. That's a pretty good clip. Right, that's 4% or 3.5%, 4%. That's a pretty good clip off the top. So a bounce should be expected. And now the real question is how far does it get, and does it do another one of those V shapes that we've seen so many of before? The question in my mind really isn't so much the V shape to start with, it's can you get back over this bar? Because if you can't, that's telling you just how weak this thing is. That's going to set up a fairly large ABCD structure of the downside to get you back into the bar that actually has swing point lows on multiple time frames. And that would be a big deal, right? I mean, we haven't seen that in 2 years. So that's that setup. The other setup, potentially, is that it does the 50-50, it gets back over it, and you get a higher move. And that could take you back up into the top of the next swing point low, which is the bottom of this resistance zone that you see here. which also is the top of the breakdown bar. This is the odds on spot that it wants to try to go to. Now, if it were to do that and get back up there, then that ABCD structure on the way down doesn't look nearly as bad. And matter of fact, it would come into the retest regenerate zone bullish off that prior swing point high that hasn't been tested yet. So if I had to guess which one it's going to do, I would guess this one. I would think this is the setup we're probably going to see. We're going to see it get back over this. That's going to put it in some sort of a range. That range may extend farther to the downside and actually test that high, that swing point high. That would come after way after 6 bars, which would give it a fairly high probability that you would bounce from there. And so that, to me, is probably the more likely of the two scenarios. But this is a market, and anything can happen. We have to watch it. We have to take the clues from this market as it trades back up, and we'll see that probably tomorrow. So let's withhold our judgment of which of the two, and let's measure the test that is more than likely going to take place first thing in the morning, more than likely. Moving elsewhere, so that's the S&P. The Dow you just saw as we were coming on. This one actually was a little bit more negative because you went over, tested into the low. That was 16,563.30. You closed just inside of it, but you went over, back under less volume. That's a negative. The Dow, if any of them are negative tonight, that is the most negative of the ones. All the others are doing retest regenerates. I'm going to just point them out. I'm not going to go through the scenario on all of them. You had a break here. The retest regenerate is up to there. So that's the area that you want to watch, which happens to be the breakdown area. If you consider how much farther, and this is the broad composite, how much farther this thing would bounce to get back to there, well, what would that do on the S&P? That would probably take it back up to that more likely scenario I was just talking about. If we look at the NDX, which of course has been the strongest, NDX also broke swing point low, and that right there, and again, same sort of scenario. So you've got the same sort of setup on all of these. The Russell, if we look at the Russell, on the Russell here, we actually didn't quite get to the low, so that's actually a negative. You would have liked it to clip that low, but it didn't because Friday's low did not get back above the high, which most of them didn't. So it didn't clip the low, a little less volume, coming up, doing a retest, regenerate. This one also, if this one can't regenerate above this, then we got some serious problems. So this is the bar. That high is just above where we're at. Numbers 1129.26, that's back on June 3rd. We got as high as 1125, so quite close. Looks like to me that one's going to try to test it tomorrow. That will also be butting into the bottom of the more serious of the retest regenerates, which is this one. So when I look at all these together, it looks to me like more than likely we're going to see that bounce continue in the morning, and then we'll see what this market is made of in terms of, does it pick it up from there and carry on, or does it just simply break down farther? So that's going to be a big story tomorrow. That is the story actually tomorrow. If we look to the sectors to try to get a clue as to what it might want to do, and we look over at the transports, here on the transports, you had broken a swing point low here, you broke again there, so here you have the retest regenerate as well. And what you're going to see on most of these charts is these retest regenerates set up all over the place. And so in this particular case, you got the 147.14, you're coming back into it again. Does it get over it? If it does, it's more likely you've got some sort of a range. And what I mean by a range, whether it's here or on the indexes, is that they're gonna move more sideways than just straight down. In other words, you don't get a small bounce and then a continuation move down. And that's a big deal, right? Because if you get a continuation move down, that's the more dangerous scenario, because what that does is that really expands that range right, over time, which is going to make it much harder to break out of that range on the upside. But it also traps more and more people at the lows. And what I mean by that, it traps more and more people in their positions. And what I mean by that is, if, let's assume this climbs a little bit more tomorrow, you would have an ABCD structure, and then if it started to fall, right, that structure takes you down to here somewhere. Okay, so assume you get down here. What does that mean? That means that anybody that bought from here back is underwater. And in some cases, that's going to be 3 or 4 months. So that's the IYT. That's the sort of scenario that's setting up there. The SOX tried to bounce today. It's coming back up into its area. It's a decent bounce. Again, a lot of damage done here. Going to try to bounce up, do a retest, regen. That low is way up here at 84.34. XLB. Materials. Materials got a nice bounce today, a little bit less volume. But the push down really wasn't heavy volume. So this one actually can come back up. But again, just like I've said, you can go find them all. Look at your lowest low. Look for the spike back up. That's going to be the test. And in this particular one, the test is the breakdown bar. That high of the low is basically the breakdown bar on the XLB. That's the spot to watch. Now, if we see, and I'm not going to go through every one of these, but if we see, 3, 2, 3, 4 of these actually getting above the retest regenerate zone and holding it for a bar. So in other words, you get above it tomorrow. So maybe you trade up to here, for example. If I can get my screen right, let me just put it over here so it draws. Let's say you trade up to here tomorrow, and then the next day you hold above it. That pretty much says, okay, we've got a range trade, right? And there's your range. Now you can trade all the way back to the top of the range or to the bottom of the range, but you've got this big area that you're going to span in, and you're going to do some sideways moves, and that could play out for quite a while. And so that's the sort of question that we're trying to answer as we observe this market over the next day or two, is do we get those bounces in enough sectors that's probably going to hold the indexes up in ranges rather than doing that full move down from here. And in this case, if you looked at it, assuming today's the high, you'd have an ABCD structure here that you could see, again, would be fairly damaging. Anyone that would have bought from May, in the middle of May, would be underwater. The weaker ones, I'm going to pop through them real quick and just glance at them. XLE, that's coming back into this bar's retest, regenerate. XLI, that's been the weakest one. That one's way under it. It will come back and try to retest that bar's retest, regenerate. XLF had a pretty good spill. You got several of them here, and it broke this one as well. So this one actually is testing now. This one's more like the S&P 500. That high is 2246. It got to 43. Again, that one looks like that one will test tomorrow. XLK, remember that came off with some heavy volume. That's a retest, regenerates, just trying to get back into the low now. XLP, every one of them are coming back in immediately, and that's just because you had an extremely bullish market. And the breaks, even though they were severe, they were up so much they just brought them back down. This looks horrible, and this is your dividend paying stocks, consumer staples. It'd probably get up there to retest, but I don't know that it's going to get much farther. XLU broke down pretty hard today, actually spiked back up at the end of the day. That's also retest, regen, and every one of them. Let me look at the last two. XLV was the only one that was still bullish, that held bullish today, and XLY had broken down. Let me see, XLY, here we go. And that one also, now this one has already gotten back over. No, that's not true. It broke this swing point low, so that's coming into the highs. Going to try to retest. So every one of them, almost every one of them, so that's 8 out of 10, going to do retest, regens, and most of them look like they're going to try to do it, or a few of them are going to try to test those tops tomorrow. So watch the tops. That's going to give you the clues. Intraday, and then of course, tomorrow night I give you my spill on it, but that's the test tomorrow. That's where everything is going to line up, and that's where I'd be looking. So if you're looking for the overview, that's the overview. Now let's dig in a little bit deeper in the time we have remaining. Of course, if you have questions, you can type them into the window. I'll try to get to them. Looks like I'll have some time. You could also text me, 303-912-9110, or you can email support@tatoday.com, and I'll pick them up from there. Okay, I want to go over to the world markets, because the tug of war is happening with respect to the strength and weakness in the world markets. We're kind of in the middle, and then you got Europe on the weak side, and on the flip side you've got Asia pretty strong. So here's the DAX. DAX trades down again, still can't find itself. This had broken multiple swing points. Usually that leads to another bar to two lower, right, sideways to lower on the longest time frame, and in this case it's a weekly. So I wouldn't expect, you got the follow through. Now you're getting more follow through. If it just goes sideways to down, that would fulfill the requirement, and not a requirement, but the fact that that's usually what happens. So Germany still looks to be in trouble. Let's look at the CACs, because the CACs is the other one. Now the CACs actually held up, and that one also has the same sort of break, but it's holding. So that one's more sideways. That's actually kind of promising, actually. Let's see what the FTSE looks like. And the FTSE, yeah, that one's also looks like it's going to try to hold. So a little bit more mixed in Europe finally. It looks like you're going to try to get a bounce, even though the DAX is still getting hammered. And the DAX has ended up being the weakest one as a result of all of the sanctions that are taking place on Russia, because the German economy is the one that exports. And so their exports are getting hit as a result of the sanctions being put on Russia due to the Ukrainian situation. If we pop over to Asia and look at the strong ones here, the Hong Kong market, Hang Seng, that one actually could come in a little bit more. It's an inside day, doesn't really tell us anything. China HCAP shares, China, I didn't see a trade on those today. I don't know if they're closed or if we just don't have quotes in yet. The Taiwanese, so they've kind of got their range in place. They've done their ABCD down. You can see that structure here. It looks to me like that has pretty much completed. So you had an A point, a B point, there's your C. So now you got your range trade going on probably. And so that's really just finally a range after a huge run. And because they're kind of a chip country, I always looked at them with respect to what it might mean for the SOX. And you can see here how this is sold off, and now the SOX is doing the same. Let's look down at Brazil. Finally getting its bounce off that support zone. India also starting to get a little bounce, and the Australian market. So that gets under, but not back over. Yeah, it did get back over. 35.80. No, did not. It looks like that's going to test a little bit more tonight. Okay, so not too bad. I mean, actually, Asia looks like it's sideways to slightly down, and I didn't look at Nikkei. Let me take a look at the Nikkei. That's coming back in for the retest finally. That low is 15,420, and it should do the test tonight. This it's actually started the test already. This actually looks like it's going to try to dig deeper tonight, and that's unfortunate, but that looks to be the case. It looks like it's going to dig into the bottom of that retest zone, 15,420. Let me look at the OX markets, and then I'll pop to questions. So if we look at the auxiliary markets, I'm interested in what some of these look like. I haven't looked at these lately. So emerging markets getting a nice bounce. And that actually set a lower low. Well, that doesn't look like it's done, given the volume expansion on Friday. Let me see what the weekly looks like. So this is doing a retest regenerate on the weekly, 3251. Well, actually on the weekly it looks like it's going to be okay, but we could get some more testing on the daily. The frontier market, which is even wilder, and that one's actually hanging at the highs pretty well, so not too bad. Let me see the euro. The euro's been getting beat up and got a bounce on Fridays, just hanging there now. And the dollar, same sort of scenario, hanging at the highs. Oil market, okay, so it gets under the lows, doesn't have enough volume. It looks like it's gonna test some more. So a retest, regen, and then probably some more testing to the downside. I saw the natural gas was up. Let's see what that looks like. Let me go to the UNL, which is 6 months instead of 1. Yeah, it's a very weak bounce though. Bond market. So bond closes the gap. This just looks like a range trade still up here at the highs. And that's just because it's come a long way. But that still could be an ABCD structure on the weekly. Which, when you think about it, it's like, they're telling us the rates are going to raise, so forth and so on, yet the bond market keeps rallying, which is like insane. Short treasury bonds rally, municipal bonds really not going anywhere. The high quality corporate bonds still range trading. The junk bonds, now somebody had asked me a question last night. Well, they got their bounce. They were looking for a bounce today, and they definitely got it. My suggestion last night was make it test. That still would be my suggestion, but you're going to get the bounce first now, evidently. And let's pop in and look at copper real quick. Still hanging at the highs. Gold. Now, gold tried to sell down today, so it's testing that low of the range again, 124.32, underneath it again. So gold's going to do more testing down here. This thing can't get going. It doesn't have anything on the way back, but it can't get going. Okay, let me see what kind of questions we got, and let me try to deal with those. So let me pop over. I don't see anything on the boards. Let me see what kind of emails or text I have. Okay, so question is junk bonds. So along with the drop in junk bonds the past week, many high dividend closed-end funds have also had major declines. They often have patterns similar to the CHW and the AOD with prices at support created many bars ago. Are these likely to rebound rapidly or just go sideways or down further? I was looking at the trading signals, and we got two of them mentioned here, so let's just pop into these two. I was looking at the trading signals, and I saw a huge number of income funds just get hammered. And then you add that to what we'd already talked about last week, where the dividend ETF has just gotten hammered. And so then you start thinking, okay, so why are dividend stocks, why are these bond stocks getting slammed, at this point? What's driving all this selling? Do we think there's better returns somewhere else? Or that these things have simply gone up so far that they're far too dangerous for what they're paying us? And so, here's the Global Dynamic Fund. I'm going to bring this back to a monthly, and let's see what it looks like. So now this is a non-adjusted chart. I'm going to bring an adjusted chart up as well and put this on 5 years as well, so you can see the difference in what it looks like. And what this is telling you is that this includes all the dividends that have been paid, whereas this one doesn't, right? This is just price. So if I look at the adjusted dividends, of course it looks a lot better. Now if you think about that, what is that telling you? That's telling you that this thing has gone up a long way, and returned a lot of money in a very safe manner to anyone that has been into this. So if you go back to like the last major low, that's 5 1/4. That's a double. That's a double in 2.5 years. That's a huge return. I mean that's a huge return, right? Even if you just take this area, that's basically, it's basically a double. And now that you've got the double, is there a reason not to be in these anymore? What happens if the interest rates start to increase? Well, that's not going to help these. They're going to get sold off. So is this finally the recognition on the shorter end of the curve that you're going to see rates start to rise versus the long end of the curve, which still looks like it wants to rally? And to me, that is what this is starting to look like. Is like the short end of the curve is getting worried about what's about to happen, and they just can't see the reason to hold for those dividends anymore. If I'm looking at this just as I do any of these other charts, what I would be watching is this, and I would watch the retest regen. If it can't hold and regenerate, right, then it has a problem. And so the bars you're going to watch is this bar, volume, this bar's volume, and how does the volume look as it comes back into it. It's coming back within 6 bars, so it's probably going to make it to the bottom end of it. So I would suggest laying off of these and making them retest into the low end of this high, which is about $9, 8.91. If it gets down into there and holds, well, maybe there is more upside still. Maybe the Fed's not going to raise rates anytime soon. But if it does start to break down, then you kind of got a different situation. So that's what I would do, and I suspect what's going to happen is it's going to fail to regenerate higher. It's going to wallow down here and then eventually break it down. That would be my take. That's my guess, and that's just because of what's happening on the macro front. Okay, let's see what other kind of questions we got. Don't have any more. Okay, well, as far as tomorrow and the rest of this week, if you look at the calendar and you look at what's coming up, and folks, you all have access to this calendar, so if you come into resources, let me pull this over, come into resources calendars, you can look at just the US or you can look at the international. But if you look at the calendar, you've got reserve banks. There's 2 of them tomorrow, Australia and India tonight actually. But you have a lot of PMIs starting to come out tomorrow and on Wednesday, and that's tomorrow night, and then again here during the day. So the point here is that you're fixing to get a lot of news on more economic front news, and that can have an effect. These PMIs are reasonably important because they're fairly recent data, and people look to those, unlike say GDP, they look to those to see how these economies are doing as closely, it's as close a measure as you can get. The flash PMIs, the PMIs themselves. So those will be the big numbers the next couple of days. And that to me, along with the BOE, the ECB on Thursday are the big events this week economically. So some big numbers tomorrow can drive these markets up or down. If you're bullish, you actually want to see those numbers come in about in line. You don't want to see them strong, you don't want to see them weak. You want to see them about where they expect them. ECB, I can't wait to see what Draghi's got to say, because ever since he's announced his little plans, this market has given it up, and a lot of that's out of his control. So what's he going to do to try to stem the tide? Because he's got to do something. He's kind of like in the boat Japan was in, not as dramatic as that, but he's got to make something happen. That's it for tonight, folks. Thanks for joining me. I appreciate it. You take care of yourself.